Let's talk about these big tech names. You've got investments across a lot of these companies. I want to start with Facebook and Alphabet. These are companies that might be seeing a surge in traffic, but there's a big danger of advertising plummeting for them this year. You've got Cowen saying that Facebook and Google could collectively lose or see a $44 billion less in revenue this year. How concerned are you about that?
Well, we are a long-term investor, so our time horizon is 5 years, and over a 5-year time horizon, we think Facebook and Google probably will be stronger after all of this because of how many more eyeballs and how much time they have attracted.
So what about Apple then? This is a company that, they're talking about potentially reopening stores in the second half of April, but stores are closed mostly around the world. This 5G phone is delayed. You got to think that iPhone demand is going to be slower this year, and considerably so.
Absolutely. Short term, we're going to see a lot of slowdowns, a lot of weakness. It's interesting, though, in China, they are starting to rev back up. We've heard that Apple's supply chain is getting back to normal in China. China really is making an effort to get back to normal. They've got a more command and control economy, so they can do that. So the supply chain problems, we think, will work themselves out. But you're right, the virus still has to move across the United States. We haven't even begun to see the worst of it. And so this is going to be a problem for sales going forward.
So, Cathie, we know that this is going to be a problem, at least in the short to medium term. Once we get a little bit more longer term, do you think we're going to start to see a little bit more capital spending by some of these big companies, the companies that have basically come out already and said they're either suspending their CapEx plans or at least scaling them back pretty significantly this year?
Well, we've been looking at capital spending for the last 18 months, and it's been pretty skimpy. Businesses generally have been scared by two things. First, the China-US trade conflict, and then last year we got into inverted yield curves and the fears of recession, and now we have the coronavirus. So we think capital spending has been too low for too long. And actually, we do believe that the rubber band is stretching and that capital spending could be one of the big upside surprises toward the end of this year and certainly into next year. We also think a lot of companies have been skimping on inventories. We went into this with consumer spending both in China and in the US much stronger than I think businesses had expected them to be.
Yeah.
Meanwhile, they had been taking down their inventory. So we think there are a lot of reasons we could see a very strong recovery next year.
With regards to the inventory issue, though, do you think that psychologically we're going to see a shift in how some of these companies think? Because, I mean, the whole idea here was to keep those inventory levels low, do more sort of build to order or, order to order, however you want to phrase it. And that was a way for companies to sort of keep their costs down. Do you think they're willing to shift to a little bit more of a heavy inventory model?
I think perhaps that, and maybe even more so, producing closer to the end consumers. And we're in our focus on disruptive innovation. We're trying to find solutions to problems, our companies are. And we're seeing 3D printing as a solution to that, quick turn manufacturing, so Proto Labs, Stratasys, Materialize. So our portfolios are filled with names that are, better, cheaper, faster, more productive, more creative. And so we think they're going to do very well throughout this or on the other side of this crisis.
Cathie, you've been really optimistic about Tesla. We've just learned that 2 Tesla employees tested positive for the coronavirus. We don't know exactly where these employees are, but the company has suspended production in Fremont, California, suspended production in Buffalo, New York. Some of these facilities might be working on ventilators. We're trying to figure out where this ventilator production is actually happening. But how concerned are you about a disruption in Tesla production, and what does that mean for the company this year?
Yeah, the ventilator production is going to take place in New York State. Actually, Elon Musk tweeted about it yesterday and said, he and Tesla would do anything that they could do to help New York as we're going through this crisis. And so I think he now understands how serious this is. Yes, Fremont, they're down to bare bones production. I think most factories in the San Francisco area, in the New York area, we're all going to find that there are coronavirus cases. On the other hand, in China, what we're seeing from Tesla and from the Chinese government, very interestingly, is the day after Lunar New Year ended, Tesla was producing, and the government was helping it with by providing masks and other protective equipment, sanitizers, dorm rooms, so that the employees could separate from one another, and catering. So I have a feeling we're going to see some upside surprises out of China when it comes to Tesla. And it would be amazing if perhaps they started exporting from China. That said, we know that the Chinese government is stimulating auto sales, giving more incentives, especially for electric cars. So we think China is going to be somewhat of an offset to what's going on here.